Mooney.
There he is. There he
Yeah,
is. There's
I'm
Nick.
here.
What's
I'm
going
here.
on? What's going on?
What's going on? Technology kicking us again?
I don't know. It's kickstarting everything here, though. Are you just long the whole world over there, Nick, or are you just selling credit call spreads everywhere?
I'm selling credit card spreads everywhere.
Well, talk to us. Which stocks are you selling them on? Because I'm selling them on the wrong stocks. Nick. Uh-oh. Technology. I think we lost
He
Nick.
called it out. He said technology's getting us.
Okay, so well, let's look here at Google because I bet he would have talked about Google because he always likes writing his credit call spreads on Google. So we'll wait to get Nick back here. But just quickly, technicals ahead of Nick when we get his thoughts. 570 is where it's closed at 570.73. It's down a buck here right now. Stock looks tired there above 580. I'd be curious as to Nick's thoughts if there's potential to write some credit call spreads above that area.
Are you looking at the Goog?
Hello.
There he is. He's back. Nick.
Yeah, for some reason the call jumped from my PC to my phone. That's weird. Okay.
Oh, okay. Well, at least we got you there. We're just bringing up Google because it's one of your favorites there, Nick. And we were looking.
Yep.
I'm like, that thing looks, like a really tired, starting to look tired here up here above 580 again. Are you looking at, writing any call spreads up there above 580?
I'm not writing call spreads on Google itself, but I could. And if I do it, I'll probably go out in time a little bit and go out with a buffer because I'm not chancing. I don't want to fight the tape, the proverbial tape. This week, Google looks toppish based on the open interest. The Goog, not the Google, looks like it's got a wall at 560. So what is that? $2-3 above. Yeah. So, they tend to trade in the same motion, although one is ahead a few bucks than the other, but they trade together. And I don't see a lot of upside potential for Google this week. I am long it via leaps, so I sold puts in it for January, and they're pretty far out of the money. So
what'd you sell?
I sold it before the split actually, so now I kind of have a hybrid position. So
both stocks.
Right. So, but it probably gives me about 20% downside from here buffer.
Hey, Nick, how many different positions do you have on at one time?
Probably about 10 tops. I don't like to keep more than that. I may be in and out. I may be fewer at times when I feel like I don't have a good enough level, grasp at things. Like I'm out of Apple completely. I just don't want to touch it until I get used to the new neighborhood. But for example, I talked about, I think it was a couple of weeks ago when I was talking to you guys, I said, and I think, Dennis, you were saying, oh my gosh, they're giving $45 for the 1500 level in Priceline in January. Yeah, well, guess what? They were in the 20s yesterday. So
wow, so that's really coming for you nicely. Did you get some sold up there?
Yeah, I did. I sold them, booked them, booked them. And I even sold a spread of 1560, 1570, and a lot of members did that as well. And they were able to pocket some money there because that spread went from almost $2 down to almost $1. So you can short this market without having to sweat it. If you want to short it here this week, yeah, sure, you can do it. You can book the money real quickly, but you also can sweat it and can be blown out.
Okay, so you're gonna let Apple gonna do its thing here for a little bit, establish some support yesterday. Or can you get a reading on the options yet, or is it still too early?
No, you can. This is the first day where I have, open interest data with the new prices. You can tell by the lovely strikes they have, 92.86, 93.21. So wherever it is now, which I believe is almost 94, 93, 93, anything above that level, as a matter of fact, anything above 91.43 favors the bears in per strike. But the high interest is 92.80, 86. And it is also slightly bearish. So it's got headwind is what I'm saying, where it is right now. So if it slides a buck, it's not a big deal. The option interest, the open interest, I should say, kind of says that, but it's defied logic because the love came in and everything is fair in love and war. So I can't use that as a level where I can short with confidence yet. This is a new neighborhood, and like we always say, they're going to chase a round number, although they don't realize that this is the all-time high. right? If you chart it for 2 years and you can see that little triangle that got it to 700, we're up there almost. So it, are they gonna get into it again at all-time highs? That's crazy. Which takes me to where if I'm right about the Apple getting, the closer it gets to 700, the less likely people are going to be chasing it, is the fact that it presents a risk to the Nasdaq in general. I looked at 416, April 16 on to a couple days ago, I think the 6th or 7th, I forgot when I looked at that. 25% of the move can be attributed to Apple in the Nasdaq. So if
Wow.
the NDX, if Apple was 10, 11%, which I think it might be more, of the index, and you take the 25% jump in Apple, right, and you weight it accordingly to that 10%, it's almost a quarter of the move the Nasdaq, and that's a lot, and that's going to go away unless Apple has another 25% in it. So are other stocks going to jump in? Google, you're saying stoppish. That's another beast in there. Amazon is another big guy. So where is the next leap up is going to come from? That's why I'm comfortable selling the credit call spreads. But again, I'm doing them out in time and up in price. So I don't want to fight the tape right here.
But it seems like some of the value tech has really come into favor here too. If we look, and they have some pretty decent weightings too. If you look at the Oracle, it made a new 52-week high yesterday. Microsoft just slightly off its 52-week high. Cisco just slightly off its 52-week high. Intel made a new 52-week high, but did reverse yesterday. So they're kind of starting to buy some of the value tech here, and it's probably been led by Apple, wouldn't it? You think there, Nick?
Right, but the big leap, the increase, and I'm looking at those big names. Do you think they have another leap up in them? I'm not
I don't
sure.
know.
I mean, that's
I've been trying to fade this market for the last month, and I've been getting killed though. So eventually, it's going to be. But I think I bought the high yesterday, so maybe the all-time high is in. So
Well,
I think I got stopped out at the high.
I tell you one thing, you're not alone. If you look at the SPX contract for June, the high interest by a long shot is 1850. And it's equal split, but it's going to be a magnet because it's equal split bulls and bears. I think last time I looked, I took a peek. I didn't download it. I just took a peek. SPX. Let me see. June, 120,000 at 1850 for calls and puts. So you tell me how the market makers are going to let it expire 100 points above that.
I don't know. And also, Nick, this is something interesting to talk about, and Dennis and I were talking about it, preparing for the show. You have the rollover. The S&P contract is going to be going into September, I believe, on Thursday. You have the triple witch coming up, triple witch expiration. You think we're finally going to get, a lot of calls in the money here. You think people might be taking some chips off the table early or just rolling out into September?
I think, like Dennis said, a lot of people are caught shorting this, and I think the people that were short last week rolled over to this week because this week the high interest is still 1900. So
wow,
and it's got good enough calls to where I don't think it's going to come down to 1900, but these guys are going to have to roll over to somewhere too, or eat it. So the people that are shorting, they're caught short close to the line, and I know a couple of them. When I short, I say, okay, I see a level at 1900 that's going to be resistance. Let's just use that as an example. I don't short at 1900. I give myself, 10, 20 points or 15, 20 points or 25 points, depends on the time frame. Some people would rather collect $1 in premium and short it at the line. I'd rather take 30 cents and go out and not have to worry about it.
I'm sorry, Nick. I just want to break in here. We're getting a big move here in the gold market. Had established major support at 1240 level, then had a bunch of highs at 1257, and we just busted through there. I mean, maybe a little bit of a negative market. Maybe people are going to the gold, but just made a high at 6380. Potential resistance level up at the May 28th high of 6750. So just wanted to break in there on the news. The gold pop there, but Nick, just overall market thoughts here. 1950 going into expiration, made that all-time high yesterday. What could be the catalyst, perhaps to bring us down besides the expiration?
The blind side is just that, a blind side. I think that the one thing that I can tell you that's going to contribute is that the 2014 bear is not the same as the 2013 bear. They're not scared. I don't think they're scared. They're still trying to short. The scars are still fresh from 2013, so they're a little smarter at it, I think. And the bull is still trying to talk like a 2013 bull, but I don't know. It's a more fair fight this year than it was last year. So there might be like yesterday, I knew ahead of the open that the small caps had room to run based on the open interest. Today, it doesn't have that same room. So I would be surprised to see it lead like it did yesterday. You know, everything was flat yesterday except the small caps. They were like insane for some reason, but then they dropped about 6 points off the high. Today they're a little weak, just as much as the other ones. So I'm interested in watching how the small caps are going to trade because they were the ones that were poo-pooed. Remember, oh, head and shoulder, blah, blah, blah. So now they're trying to make a comeback, and they moved about almost 4 points in 3 days. So um, I don't know if they still have that same zeal upwards from here. So this week is this is where the bear can make a statement saying, no, Mr. Bull, you can't do the same as you did in 2013 to me. In other words, you don't have another 100 points up from here, straight line. That was my thesis all along. We have room for upwards, but not all in a couple of days. So, give yourself some room to creep up, but don't expect leap up. That's my thesis. And I'm still sticking with it, and I'm trading according to it. So I'm shorting with time and the buffer. And I may add some credit put spreads to it in order to hedge my bet. So go long also with time. But I haven't done that yet in much of in size. So last year I was shorting I was going long 2 to 1 short. This year I'm probably doing more heavier short than long, but I'm still long a few things. Like I told you, I'm long to Google, and I offset it by shorting Priceline. The only way I can really lose is if Google buys Priceline.
Oh, don't talk about bad stuff like that happen. You're always good though. Nick's always smart the way he does it because you always hedge yourself out. You always buy that. Like you always do the credit. You never leave anything open ended, right?
No, I do. I did in the leaps because there's I would need a 30% move for me to be blindsided, and even then I keep it small in size in order to control it. And I don't do it in the indices because they change rules on you, like margin rules and requirements, and then you get the knock on the door saying, "Hey, margin call." So you don't want to do that. Always limit your risk. If you don't know what you will lose should the worst case scenario happen, you're leaving yourself to a lot of unstable nights of sleep.
Okay, we've had Nic Chahine on, as always, on Tuesdays, creating income with option spread. Nick giving us a good look at the market today. Thanks for coming on, and we'll talk to you next week.
Thanks, guys, for the invite. Always great fun.
Thanks, Nick.
Bye.